All right. I was here. When did you lose me? Right. Were we here together?
That's correct, sir.
Yes. I
Right.
think the last part when you said income tax is equals to,
Oh, this time.
then I think
That
that
was
should be.
here, eh? Sharp. Thank you. Right. Income tax figure that you show in the P&L, right, is an addition of current tax, 255,150 there, right, plus deferred tax, which is 12,150. Right. If it's a deferred tax liability, you add. Right. If it's a deferred tax asset, you are going to deduct. Right. I will show you that by way of journal so that you can have an amount of 267,300. So you will see that when you do self-study and you go through the study guide maybe or the textbook, they will tell you that income tax is the sum total of current tax plus deferred tax. Right. If we're doing a general debit or credit, right, you generalize the current tax on its own. If you go to the current tax, the figure is 255,150. You debit income tax, right? You debit income tax in the P&L. Remember, this is a income tax is an expense. So therefore, you have incurred an expenditure. So you have 155. And then you credit a current tax, right, in the statement of financial position. So that would be your general accounting for current tax. Then when it comes to deferred tax, you need to say, what is the movement in deferred tax for the year? Now, remember, assuming that this is a startup company started in this particular year, 2025, you were not having any deferred tax. Now, all of a sudden, you have a deferred tax liability of 12,000. So there is an increase in a liability. Now, remember, a liability, right, has got a credit balance, right? So therefore, the deferred tax liability goes to the statement of financial position, just like any other liability you credit if it's an increase in a liability. You credit that. Now, the other leg, right? Sometimes they say income tax. It will have to go to the P&L account. So what to do if you don't want to make any mistake with the deferred tax journal, because especially if you are doing CTA, they are very fond of asking for that journal. Even if you are doing CT1, the undergrad, they ask that journal. If you don't want to make a mistake on the deferred tax, you go and check your deferred tax and say what is it? Is it an asset or a liability? Right. So we are very clear. We have a deferred tax liability. Then you look at the movement. You say, what is the movement in this liability? Did it increase or decrease? Remember, it's a startup company. It did not have deferred tax. And therefore, we have an increase of 12,150. And then you apply simple accounting logic. If a liability increases, then it increases on the credit side. So therefore, the leg for the deferred tax in the statement of financial position, you will credit. Then the balancing or contra entry, you send it to the income tax in the P&L, and your journal is done. Right, so which means via the journal, we would have populated this line, which is income tax in the P&L when we pass the journal, because we have that, we are going to have that particular amount.
Let's correct the income tax journal. It must be 255 or not 155.
Is it 255? Sorry about that. Sorry about that. Thank you. Right, so 255 there, 255 there. right? So which is that current tax figure that we have, right? If you understand where we are, you are very important. Any question?
Okay, sorry.
Right.
Let's say we had.
Hold on. Let me try and mute here. We have a bit of noise in the background. Right.
Okay, I was just asking if in case we had a deferred tax asset. Actually, if we had a deferred tax asset, we will debit the deferred tax asset. So what will be the contra account? Is it still going to be the income tax?
Yes, it's still going to be the income tax. But I want you to be very clear from the onset because these things are very technical. Right? What we generalize when it comes to deferred tax, it is not the amount of deferred tax sitting in the statement of financial position, it is the movement. Because deferred tax, when I have an amount of deferred tax liability of 100,000 at the beginning of the year, if it increases by 12,150, I already have 100,000 in the book. So you generalize the movement, not the full amount of deferred tax that you have. So here I generalized 12,150 because we started from 0 and it increased to 12,150. So there is a movement, which is an increase in deferred tax liability of 12,150. Right? If it's an asset, if you have a deferred tax asset amount, you must say how much did it increase or decrease by in the current year. Now, remember, if you have a deferred tax asset, if it increases, then an asset increases on the debit side. You will say deferred tax asset, right? Statement of financial position, you put the figure there. Right, then you credit income tax, right, in the P&L. Right, this is only if there is an increase. If there is a change from the balance at the beginning of the year to the end of the year, which is an increase. If there is a decrease, it's opposite. Right, if there is a decrease and it's a deferred tax asset that you are dealing with, an asset increases on the debit side, an asset reduces on the what? On the credit side. So if there was a decrease, you'll say deferred tax asset, it is reduced credit. And then you say income tax, P&L, then you are going to debit that particular amount. So it is the movement, but don't worry too much about that. Basically, we will be doing more of that in the next lesson. This one, remember, we're just introducing. We are just scratching the surface. Right. Any questions, good people? Are we on the same page? Right. So the 12,000 in this instance is going to be a deferred tax liability. It's going to sit under the non-current assets in the statement of financial position. The current tax amount, this leg here, is going to sit under the current assets, right? Because we are going to pay it in the next year. So it's a current asset, it's a current liability, sorry. So it's going to sit under the current liabilities. And you'll be done with that particular transaction. Right, so I think we'll hold it here. What we are going to do, let's meet on Sunday, right, at 2:30 p.m., I think to 5 p.m. I've got a class there, which going forward will be specifically for the 3764. Right, however, remember we are still doing our introduction. So for the first two classes, it can be the same, no problem. We will then unbundle as we go ahead so that we can meet on Sunday and then meet again on Tuesdays, this time at 18:30, right, to 2100 hours. So these are the next two classes that we are going to have for all these modules, right? So we are going to add 4861 and FAC 4862. Right. Here, because I was just introducing you, right, I showed you this type of calculation. Right. This type of calculation you will never be asked in the exam to present. Right. In the exam, what they do, or in the assessments, you need to deal with the calculation of deferred tax, right, via the statement of financial position. So I will be teaching the statement of financial position on Sunday. Then on Tuesday, we're just going to be doing maybe 2 questions to practice more. So when you do the statement of financial position, you must understand that these temporary differences that we're talking about here, they also impact the statement of financial position. So if I have an asset that I buy for 1,000 and then depreciation is 500 rand, and then the tax allowances are 600 rand. Now, between these two, there is a temporary difference of 100 rand. It can be captured the way that I showed here, but this is just for learning purposes. Right? It can also be captured by looking at the differences between the carrying amount of the asset in the statement of financial position and the tax base according to SARS. Now remember, carrying amount is 1,000 minus the depreciation, which gives me 500. Right, the tax base of an asset in this instance would be the purchase price, which is 1,000, but less the tax allowances, which is going to give me 400. So instead of calculating the temporary difference by looking at the impact in the P&L, I can do it by looking at the statement of financial position and then say, in terms of the carrying amount of the asset, what is the figure? In terms of the tax base, you will find that it gives you 100 rand. So you are examined on this, which is the statement of what? Financial position approach. This is what we are going to be learning on Sunday. So if we can do this on Sunday, then on Tuesday we won't be learning, we just do 2 questions. Then I will be in a very good space if we do that. Right. Any questions, good people? Any additions? Right. Hopefully we are all on the same page. So let me end the class here. I will wait for it to download, then I will give you a link to this particular class. So my request to you is that when it comes to year modules and CTA, things move very fast. So don't relax, go through the recording. Make sure that you are very clear on what we have covered today. And then also make sure that if there are areas that you don't understand, right, you can always give me a shout during the week within working hours, or you can ask them when we meet on Sunday so that we explain them and move together unisamely. So, but don't come back to class without covering the stuff, because now you will be a little bit lost because we'll be introducing something new. Thank you. Let me check the chat here. All right, so the recording for this one, I will share a link in the group, which you can then use to access. It's a link to a YouTube channel. For now, I've made everything on the YouTube channel downloadable, so you can just go in, open the YouTube, download the video, and you can watch it over and over again. Thank you.
Thanks, David.
Thank
you, David.
Sharp, sharp.
Thank you, David.
Thank you.
Thank you so much. Bye, everyone.